Hello and welcome to a brand new show of Market Makers. As we roll over from year 2015 to 2016, the big question is that how will 2016 be different from 2015? The hallmark for 2015 has been great macro, but market returns have not been extraordinary for benchmark indices. Whereas mid-cap stocks, they continue to flourish, it is evident that foreign institutional investors are no longer committed to invest capital into India because globally emerging markets are going through what could be called as an intense adjustment. So what is the way forward from here? What could be some of the big themes for 2016, and individually how should one pick their spots? So to discuss all that and much more, I have with me Sandeep Tandon of Quant Capital. Sandeep, fantastic to have you back and thank you for joining us. 2015 has been a year of great macro. Oil prices have come down, interest rates have come down, globally commodities have taken it on the chin, yet market returns have not been very great.
Okay, see, you look at, let's look at example like how market unfolded from 2003, okay. 2003 it moved up, there was a consolidation, then small correction, and then 2007-8 it peaked out globally, okay. Similarly, if we believe that August 2013 market started rallying, though I believe that August 2012 market started rallying. So if you look at August 2012 or 13, 1 year of big move, 2014 was very, very good. The 2015 is some amount of consolidation. In fact, in our strategy report in January 2015, we wrote about that this bull run is only for brave hearts. Okay.
So let me just introduce your latest strategy report, and this is from the hounds of Quant. And the headline says, fear subsides, rally resumes, and the China rally or the China fear trade may not last all that long. So let's understand first, when we started the year, the general sense was earnings will expand, margins will expand, and P multiples will expand. But none of the following has actually transpired into reality. Earnings have been poor, margins have been flat, and P multiples have contracted.
Correct. So let's look at the demand supply, the most important aspect. What went wrong in 2015? Okay, people have fairly good sense when we have been talking about dollar strength for last 2-3 years, right? Actually, from August 2012. With the dollar strength, there was a big impact on the global currency, particularly emerging market currency, and frankly speaking, India has outperformed in that basket. But when you see a huge meltdown happening in the currency, it has impacted the global market flows in a big way. So you have seen that emerging market outlook continues, and it still continues as of now also. And this is one of the reasons why India also underperformed, Indian P also contraction, because India attracts more money from the EM fund as compared to the GEM funds, okay. So unless that trend changes, we will not attract big money. But our call is that we have already seen an exhaustion somewhere in the September, October month. We already seen a massive exhaustion and the selling pressure is already over. So I think 2016 should be better even for emerging market. The currency should stabilize despite dollar strength. So our view is dollar strength is that dollar can go up to 110 plus in 2 years time, okay. Despite dollar strength, I think emerging markets should do better, okay. And India in particular should do well.
So the decisive trend for 2015 was that domestic institutional investors, they made a comeback, and frankly, it's the DI money which has supported this market. They are the ones which are really giving this market a very strong base, so to speak. Yes. So what could be the decisive trend for 2016?
See, when we talked about, let's look at the global perspective first, okay. Despite that DM has been a big outperform, when I talk about US, Japan, or even continental Europe has been big outperform, I think that theme even continue, okay. The only difference, the differential between the DM performance versus EM performance was very huge. I think that will settle down. These markets will still perform. Even emerging market will also start giving you performance, not on a relative basis, but in absolute terms.
So you think 2016 would be a year of double-digit gains for benchmark indices?
From India perspective, clearly yes.
What makes you bullish? Because for benchmark indices to do well, a large cap theme, the large cap sector has to do well. Okay. Banking is in a disarray, Reliance is not going anywhere, and pharmas have cracked.
Correct. See, anyway, pharma weightage in the indices is very small. But we are extremely bullish on the banking space, including public sector banks, which has the largest weightage in the index, Nifty or Sensex you look at. And second theme we are very bullish is about the energy space. So we talk about Reliance or IOC or BP, HP. That whole space looks very good to us. Okay?
Why are you bullish on it?
Okay. Two reasons for that. First of all, If you're looking at the banking space first, the effort which Ministry or Raghu Rajan is playing, I think is the cleansing of the system which is happening, and the biggest beneficiary will be the banking. Whether you talk about bankruptcy law or recent move which we have seen that government or some of the people, institution have taken tough actions against some promoter, is a very, very healthy. Our view is that incremental NPA will start declining from the first quarter of next financial year, okay? And that itself will give a huge boost to the banking space, grossly underowned.
But on the flip side, the banking space will also see mega disruption, whether it is universal banking or your payment banks. They would be a reality in 2016 and by 2017 for sure. So why associate with a space where you know that disruption is coming?
The disruption will be there in a small way. First of all, they also need huge funding, and that change will also take few years. I don't think that's going to happen in next 12 months or 18 months time frame. And then we are talking about sticking with the large cap name. We talk about SBI, we talked about Bob, maybe Union, Canara. So we are not talking about getting associated with the smallest bank. Okay, so we are very clearly looking at the theme. We strongly believe that consolidation will happen in this industry, and maybe another 12 to 15 strong banks will emerge, okay, and this will lead to a consolidation. So focus should be on the large caps name in the PSU baskets, okay, maybe beaten down stock like ICICI Bank, which has not performed, that is another stock. HDFC will continue to perform very well. So I think if the banking basket, which has closer to 33-34% of weightage, start performing, obviously India. Second, most important, you talked about Reliance. Though IOC doesn't have any weightage, but HP, BP, IOC put together has reasonably good weightage, and then you add Reliance, okay. We are extremely bullish on Reliance also. Our view is that Reliance can give you 30% return in next 1 year.
Okay, so I'm just I will come to Reliance in a minute, but let's explore why do you like PSU banks. Now, NPAs, I buy your argument that NPA fresh formation may not happen, bad loans could become good loans as the economy recovers. But for banks to go, credit growth has to come back. And if inflation or if CPI is negative and if commodity prices are in a downturn, the credit offtake will not be that smooth. The credit offtake is a function of pricing power, which currently corporates are not enjoying.
So I will divert a bit, okay, instead of looking at pure fundamental data perspective, let's look at the behavior data point first, okay. We have seen some amount of massive capitulation happening in the month of around 15 September at 15,800 level. We have seen a bank nifty or banking stock have capitulated. Similar trend we spotted somewhere in the month of September 2013, and then we have seen a more than 100% rally happening in the banking stocks. Okay, so similar. So what it means that capitulation happened, and similarly we have seen a euphoria which happened in the month of February 2015. After that euphoric move, we have seen a massive correction, okay? So first look at the price movement and these behavior data points. Behavior data points, we have clearly indicated the bottom is in place, okay? And if you look at even last 30-40 days movement after post 15 September, bank nifty has clearly outperformed the nifty, okay? That also gives you, and these are grossly under-owned stock. None of the PSU banks are owned by FIs.
So you like PSU banks more as a trade?
I think from a relative basis, they can outperform in a short term, and long term, I think I'm bullish. Maybe if I have to give, I'll give equal weightage to both PSU and the public sector.
Can the bank nifty give a 15% return in 2016, or that's tall order?
No, easily. In fact, we are talking about 26,000 bank nifty could be in the first quarter of next year.
Which means you feel that in 2016 the market rally will be front loaded. We will start the year on a high note, according to you.
Yes. Our thing is also that, see, you look at the fresh allocation will also come. We have seen some amount of exhaustion, and our view is that there's a high probability that India dedicated money will start coming. The GEM fund exposure will start increasing. The Sameer and
the Akash Prakash of the world, they'll
start
getting
money. They're seeing, I'm not talking about only this particular segment, even global perspective, even from the US perspective where you get maximum money, India dedicated money come. See, look at the global theme with the crude at $40 today, okay, and relative strength of emerging rupee, and given the improved macro situation, I think India will attract money, okay. The point is that right now people have given up, okay, and it is clearly reflected in our capitulation index, okay, which is completely at second year, one of the highest level after 2008 crisis. It means people have given up, people are frustrated, okay. So after...
So you're bullish on the market because the Aam Janta, if I may use that word, the Aam Janta is bearish.
Aam Janta is definitely bearish. In fact, when we talk about a fear and greed, can we quantify this fear and greed? Okay.
It's a behavioral indicator.
Yeah, yes. Okay. So we have, if you look at 2004, 2006, 2008 top, there was a huge euphoria. Our euphoria index spiked. In last 2 years, there's hardly any euphoria, except banking stocks. We have seen some euphoria in February, but if I look at BSE 500 or market as a whole, I don't think any euphoria has happened. So if there is no euphoria, it means market has not peaked out. The biggest concern is people have that market has peaked out or not. Okay, right from 2008, a lot of people started saying that global market has peaked out, and then you look at what happened. August 2012 and 13 onwards, global market has made a new high. Whether you talked about US market, European market, and so even Indian markets. Okay. So, and Chinese were also close to the 52 weeks high. Okay, so the point is that market never ever peaks out without euphoria. Okay,
and right now there is only fear, no euphoria.
Yes.
Okay. So let me scan through your research report, and in your previous report there was a lot of mention of pharmaceuticals.
Yes.
You've been long pharma, you've been bullish pharma, and you've said that pharma is in a secular bull run.
Yes.
What's gone wrong?
Okay, so I don't think we have changed our view.
So you still feel pharma has a long way to go?
Okay, with small correction and consolidation.
40% in Sun Pharma is not a small correction.
See, Sun Pharma has its own problem. Okay, Dr. Reddy was definitely a surprise element and serious governance issue which people have not expected. Okay, Sun is facing turmoil for last 2 years, so it's not something was new for. We have been quite bearish on Sun for quite some time now. Okay, I think if you ask me, if pharma is not in the bull run, then Sun Pharma could be 400 rupees. Okay, since we are in the bull run, that's the reason stock is holding on. Okay, so it's a question of time.
But you will still not buy Sun Pharma at 700?
No. Okay, I will still go for same thing, which is stock which we like, whether it's Aurobindo, Lupin or Cadila, maybe Divi's.
Why do you still like Lupin? Because my worry about Lupin is the following, which is that Lupin has been a zero debt company. You've gone and acquired a big company, Gavis. Okay, it's a good company in the developed market, but in order to complete that acquisition, ultimately you will end up becoming you will no longer be a debt-free company. You will have to acquire a lot of debt.
See, I think people have not understood the real transaction of Gavis. See, immediate impact of Gavis is not there. But if you look at, go to the conference call, what they're talking about the next 4 quarters, I think you will see a bigger impact coming from Gavis. Okay, and the most important thing, approval started coming in. Okay, last 6 months, if you notice, the approval, I think Lupin and Aurobindo put together could have got maybe 1/3 of the approvals. So we remain very bullish. It's a question of approval. Earlier approval was not happening, so there was a delay. Now I think those things are getting resolved, and we have seen one round of correction already happen in Lupin. So I think Lupin is on recovery path.
So what is your price target for Lupin?
I think
the smile tells me that you have a really big target.
We have big target, but from a compliance perspective, we don't want to talk about very aggressive numbers. Okay, but I think stock, if my theme on the pharma bull run continues, I think I don't mind giving a 100% return also in these names in next 2 to 3 years.
How does one understand and dissect a very basic problem, which is that US FDA is stringent, and there is a price erosion in the US generic market. And given that 2016 will be a presidential election year for the US economy, maybe the maybe the pharma rhetoric in terms of bringing the price down, they will only increase.
See, I think I will say again, I will look it from more from behavior perspective. When you see such events happening, people tend to read too much into it. Okay, as approvals start pouring and then quarter-on-quarter results, the people will forget. Okay, the point is that obviously US approvals has been stringent, their guidelines have been tough. Okay, but as a theme, so I'm saying for a small tough step which they have taken as a theme will change completely? Answer is clearly no. Okay, and even if you look at the Obamacare theme also which you're talking about, the India Pharmaceutical is the biggest beneficiary, and some of the changes which is happening on the biotechnology space out there, and that can also lead to get a lot of support for Indian pharmaceutical space. Net is remain positive for the whole.
The favorite word for any fund manager right now is spot the next disruption. So what is looking disruptive right now?
That is very difficult to, only post-mortem analysis is always easy to talk about.
See, are you picking your spots somewhere that, oh, this could be the next disruptive company, this is the next disruption?
See, a lot of disruption will come from the technology space. Okay, banking people are talking about small, but again it's the technology supported. Not many listed companies we see that issues. Okay, so we have been very bullish on the cloud theme or analytics themes or the IT security theme, but how many companies are there in the listed space?
So where are you picking your spots in mid-cap IT?
Okay. I don't think any new ideas are there at this stage. In fact, if you look at the smart money is actually moved to the private equity space in a big way. Okay, where people are, if I have to say, punting around, yes, people are looking for opportunity in the private space, because hardly listed space you don't see that sort of opportunity.
You've been bullish on Maruti, you've been right on Maruti.
Yeah.
At 4600, 4700, do you think Maruti may not offer a great risk-reward ratio?
May the outperformance which we have seen, okay, may not be there. We talked about in 2000, I think last year also I talked about a 5,000 target. We are closer to that mark, okay. But the call is what happened to the yen, okay. If yen keep on depreciating, then Maruti is a beneficiary of that, okay. So our 2 years perspective, I have a call on, let's say on 123, yen is there. Our perspective is that yen is heading towards 143, 146 mark, maybe 18 to 24 months perspective. Then by default, Maruti is a beneficiary. But I agree with you, you may not see that sort of outperformance what we have seen in the past.
Let's go back to Reliance.
Yeah.
What makes you bullish on Reliance? Because for Reliance, the challenge is that the E&P business is not firing full cylinders, which means 1/3 of the projected earnings now will take a backseat. And historically, I've always seen that commodity companies don't do well in an environment where commodity prices are collapsing.
Nee, for a Reliance perspective, two things. I'll again come back to the first from the behavior perspective. We have seen a massive
So first you like
capitulation.
Reliance because nobody owns Reliance.
Okay,
because
so,
it has been an
it has qualified in terms of a system. We have seen a massive capitulation in Reliance.
That's
okay?
checklist 1.
Yes. So if anything is capitulated, gives me comfort that worst is behind us. Okay. Then second, obviously, from behavior perspective, is a grossly underowned given the weightage which it has, an amount of hatred the global fund managers have for Reliance. Okay.
Nobody has a bullish view on Reliance. Let's
Yes.
be real.
Okay. Despite some of the positive reports have started pouring in, but if you really look at the institution holding, whether in last one quarter it has increased significantly, answer is no.
It is a bellwether stock, but no longer a bellwether holding. Let me put it this way.
Okay. So when we see extreme situation, okay, like when we spotted a rally of pharmaceutical, FMCG, or IT in 2008, people have given up. Okay, there was no hope. The whole 2003 to 2008, these sector underperformed, and then you see what happened. So if we believe that in last many years Reliance has underperformed in a big way, and we are talking about energy basket as a theme. Okay, so we are not looking at only Reliance. We believe IOC, BP, HP, maybe up to a certain extent, GAIL will also perform very well. Okay, when whole basket moves up, Reliance should be outperformer. Okay, and things are changing. People have
But can a
completely written off
commodity
a
heavy
geo.
company do well in an environment where commodity prices are contracting?
See,
That's
you
a very
also
basic question.
No, you also have to look at now. Reliance also has a very large dollar income. Okay, with the rupee depreciation, the general view is negative for rupee. Okay, may not depreciate with that pace the way emerging market has collapsed. Maybe everybody believe there could be a pressure. Okay, and in that background also it gives you a huge support. Okay, so I'm looking at the combination. Fundamentals is not very expensive stock. People have written off Geo, which we will not talking about. Okay, and if that turn out to be good, in terms of whatever rollout they're talking about, I think that could be positive. Under ownership gives you huge thing. Rupee supports you from multiple factors. Okay, even valuation, I'm not getting into very detailed aspect of valuation. Maybe our analysts can justify much better. That's a combination. If I am looking at, then I think that's a stock will underperform, which outperform in a
For
big way.
stocks to do well, you need more than earnings. You need participation. You need behavior patterns as well. So let's start getting some.
And I'll also look at last 2 or 3 months behavior. Reliance has actually outperformed the Nifty. Okay, and if this momentum
outperforming the Nifty actually,
Yes,
you're absolutely
okay.
right.
And this momentum continues, then people will come and chase.
So
and then you realize suddenly in one quarter it's up 20%.
So is Reliance an absolute return idea for 2016?
Clearly, yes.
I mean 30-40%, that kind of.
Our view is that
cannot
we
be
are
ruled
looking
out.
for 30% return in 2016.
And for a large cap stock, that is sizable.
It's a very good number.
So let me get some closing comments from you. And let's talk about mega trends for 2016. One has to be the IPO market. The way IPO market has picked up, IPO market will keep us busy in 2016. What will be the implications of that on the secondary market?
I think it's positive only. Okay, a lot of people believe the liquidity gets sucked out to the primary market. I think we have seen historically, okay, if there's a demand, liquidity will emerge from different quarters and you will not realize
New sectors will get created.
Yes.
Are you betting on any new sectoral creation? Because Indigo created, injected life back in the aviation sector.
Yes, but we are not looking anything new right now. Okay, I think when you talk about heavyweights, so energy, banking is a theme which we are playing for 2016. Up to a certain extent, cement name, up to a certain extent, capital good names. Okay, but pharma, we are not leaving it. But pharma is very stock specific. We are not talking. Maybe
Are we in
index
for
will be
earnings
down.
surprise for 2016?
I personally believe there will be earnings surprise. Worst is behind us. Okay?
What is the best and the worst case scenario for the Nifty?
I'm not changing our target as of now. Our March target is close to 9600. 92 to 9600 we have talked about in our report. We maintain that levels.
If I give you option to invest in only 2 names or 2 themes for 2016, how would you invest?
So IOC, Reliance is one stock as a combination energy, and maybe SBI and Bank of Baroda as a second theme.
So you're very clear that energy and banks are the way forward for 2016, and 2016 will be a better year than 2016.
Definitely.
Okay. I like the firmness in your answer. Really appreciate your time.
Yeah,
Glad
thanks.
you could join us. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.